Inflation has hit all the sectors. Now, ever the most crucial healthcare sector has also been hit. Now, given the rising medical prices, it has become very crucial now to have your own health insurance in place that can cover your hospital and medicine related expenses. But what if you are unhappy with your insurance or you found a new insurer that meet all your requirements? How should you port your existing insurance to a new one? In such a case, we'll be discussing that and what are the documents required to port your health insurance. To help you with a complete guide, we have on board Mr. Anil Rigo, who is the founder and CEO at Right Horizons. And a very good evening, Anil, and thank you for all your time to ET Now. Firstly, would like to understand that when should you be porting your health insurance policy? What are the checklist and how should a insurer or a policy holder actually decides that now it is the right time that when I should be looking at porting when this scenario occurs generally?
Yes, so it is a good feature today that you can actually port your policy. You can use a alternative insurer, to the one that you already have, and you will continue to get the benefits of all the no claims and stuff like that that have come to you. So it's a important option to consider. And when do you consider it? You consider it when let's say either you're not getting the right service, you are actually the premiums are costlier. You find some of the provider with a lower premium, and you also have some additional features that you find interesting for yourself. For example, somebody may want an Ayush treatment as part of their medical thing, and that is something that sort of one can end up doing. So those are the aspects of when you should actually look at putting your policy. How do you go about the process? Technically, you need to go back almost like 45 days before to the insurer, and that's a bit of a time that is required. So if you go there by the time, then there's no way that anybody can refuse. Number one, there is an IRDA form of which you need to fill for portability. You need to then the insurance company will then underwrite your policy, look at your health background, etc., and see whether they would like to continue with the policy or not. And within 15 days, they need to come back and tell that either way is yes or no. And if there's a delay beyond that, actually, you can assume that they have accepted it. Okay, then the insurer may want various documents for porting, which also may have to submit at various points of time, maybe before, maybe after, and stuff. Documents including ID, address proof, etc. You would have certain information that they may want from the previous, insurance company in terms of claims. Okay, and then once acceptance is there, then you actually have a 30-day grace period to pay your premium. So that's the other good part of it. So if it's something that you want to do, IRDA has made it pretty simple and easy, and very friendly to the policyholders.
Very detailed answer on when you should actually decide that you can actually go for porting your health insurance, and not just that, what are the things that you need to be taking care of and what exactly is the process. But now, Anil, my question is, like, are there any charges to port the health insurance policy to a new one? Like you were mentioning that there is a form that you need to be downloading. So is the company or the insurer charges you anything in order to port your health insurance?
No, actually, by IRDA guidelines, they cannot charge you anything additional for porting your policy. Okay, so that's the sort of other good part, and there are very clear guidelines laid out. So somebody cannot just like that, go and reject it and stuff. So it's pretty beneficial to policyholders.
What are the essential documents while doing so? If you can just tell our viewers that what exactly documents they need to have in place in order to apply for the porting of this insurance.
Yeah. So the new company will, of course, apart from the IRDA portability form, that you need to submit, you'll have to give various, your KYC like ID and address proof, etc. Then you will also have a proposal form that the new company will ask you to fill up. They will ask for the claim history, and they may also get a bit of a medical, basically case history from the previous provider, and they may also ask for certain medical related documents, history documents, if they find some claims or there are other things that they find out during their underwriting. So it's not necessary that it may stop there. So they could ask for additional documents based on the medical history that you provide.
Understand. Anil, thank you so much for helping our viewers understand what exactly is insurance, health insurance porting, and how does it work, what are the things that you need to be taking care of. But to all our viewers, now it's time to take care of your portfolio queries. And firstly, let me take up the query of Nena. Anil, we shared the question with you, and let me just read that for our viewers. Is that Nena tells that she's investing in mutual funds for the last 5 years, and she has actually accumulated a corpus of 5 lakhs in the last 4 years, and now she wants to pay off her car loan of rupees 50 lakhs in the next 5 years. So she wants a suggestion on some funds that she can actually invest 30 to 40,000 per month in some mutual funds. So she just wanted to understand what is the plan for her, and also if some mutual funds you can suggest to her.
Sure. So assuming that she wants to invest about 40,000 rupees a month, okay, in about 5 years at 11% type of interest, you will find that this comes up to almost like 29.9 lakhs or so. So that is something which she will be able to accumulate, and maybe with some of the other savings, etc. Then she could also look to close down the particular loan. Now, how can she sort of go about it? One thinks that she could use something like let's say a combination of equity mutual funds will only give her that higher return that maybe she can utilize for it. And she could use a combination of say large caps and mid caps and say flexi caps. You can also use hybrid funds. So some of the funds I could suggest is, let's say on the large cap side, you can use the ICICI Pru blue chip fund. On the mid cap, you can use a PGI and mid cap opportunities. And SBI focused can be, a flexi cap fund that one can use. And on the hybrid side, to just have it a little lower risk, the hybrid, you can use a ICICI Pru equity and debt fund. And just keep in mind that since we are using equity funds, if markets are low at the point that you want to sort of redeem it, it may become a bit of an issue. So it may extend your period a little bit. The other one is if at some point during the cycle you suddenly see a large market move and you find a windfall, then you should just go take it prepay. Even if it's partially, you can, I think, go and prepay your loan a little bit, because market cycles may not favor you at that point of time. So that's just the one caveat that you need to keep in mind while you are using money for a 5-year period to repay a loan.
Understand. But Anil, let me take the next query, and that is coming from Nimesh. He says that he's 32 years old as of now, and he works in an MNC. His monthly income is 78,000, and he can actually invest a maximum of 30,000 per month in mutual funds, and he wants to have a corpus of rupees 20 lakhs in the next 10 to 15 years. He's currently investing in some of the mutual funds. Let me just read that. Firstly, it's PGIM Mid Cap Fund, where he's investing 10,000, SBI Magnum Mid Cap Fund another 10,000, and SBI Small Cap Fund another 10,000. So in all, 30,000 is what he's investing. But the question is that should he stick to these funds to achieve his targeted corpus?
Well, definitely, actually, he'll be able to exceed his target of 20 lakhs. If he looks at it, in this period of time, maybe way above. Okay, so you possibly can, take the fruit of it earlier and for any need that you may have, or you grow a corpus, much larger. So the 30,000 is a good number that he's doing. So that's a great thing. What is it that he can look at right now? Because from the list of funds that he has PGI mid cap, even the SBI Magnum mid cap is there, as well as a SBI small cap. Now they are all mid and small cap funds, and you must keep in mind that there are periods when mid caps do better, mid and small caps. There are periods when large caps do better. The tendency for us is when we see some good returns, past returns in mid and small caps, then we tend to invest more into them. So that's probably what happened, because the last couple of years mid caps did pretty well. But keep in mind that there's sort of a 2-year cycle, and you may find a lot of volatility if you continue to just only use mid and small cap funds. So I would suggest, since his requirement also not high, he could use part of it into large cap funds, and some of the names that we had already suggested. Let's say an ICICI Pro Blue Chip is a good thing to use, and probably a flexi cap like SBI focused equity. Maybe these are the two funds that he could add to his portfolio to ensure that there's a little more stability to it.
I understand. So that's the piece of advice coming in for Nimesh.